What's going on, traders? Hope everybody's having a great weekend. It is Sunday, May 21st, and we're looking at the weekly chart of the S&P 500 here. Friday, pretty much nothing day. We had OPEX, of course. Markets were ending slightly red, 0.15%. Final print being at 418.62. And before we get more into the charts, don't forget, if you're enjoying the content that we are providing about the marketplace, subscribe to the channel, smash that like button, really helps us out. And don't forget to hit that notification bell. That time you are alerted every time we post new information about the markets. And of course, this video is for entertainment and educational purposes only. So with that being said, let's get into it here. All right, so we're looking at the weekly chart now. Nice green candle here on the weekly. We are now above the daily 9 here on the weekly very nicely. Nice confluence starting to form here with the downtrend and that weekly 9 moving average here. So we want to watch out, if price does come back and retest in that 410, 90, 411 area. So that may produce a nice opportunity for us as we develop into next month. But for the last few days, I've been talking about a change happening in the markets. And, one thing I want to qualify is a lot of people talk about, a crash. This is the top. This is, about the gloom and doom type of situation. I don't really subscribe to that, something like that. There are no real signs that are saying the market's going to tank or go down to. I've seen some posts on Twitter saying, we're going to the COVID lows and all this kind of stuff. I mean, which is just ridiculous. Bulls overall, bigger picture, are in control. All right, we can't deny that. Sure, we've got stuff going on with the debt ceiling, and inflation is slowing down, but it's still on the tip of everybody's tongue, affecting myself, everyday, hardworking Americans, families. So, we do have that, those backdrops, sure, but does that mean that the market's going to be tanking to COVID lows? Okay. Not unless we really breach some certain key levels here. So, that I've been talking about a change happening in the markets, but that doesn't mean that I'm talking about a crash. We're just talking about a retracement of some type, and I will stand by that. We did call the top here in February with this move to the downside, but let's see if we can do it again. Again, this is a retracement. This isn't a crash. So when I'm talking about getting a little bit more bearish now, it just means that I'm talking about a retracement. All right. So just wanted to clarify that. And have that distinction, because a lot of people, especially on Twitter, like I was saying, I'm seeing people talk about, big moves in the market to the downside. For me, it's not what I'm talking about at all. So, we do have some warning signs here, and we've kind of been going over them for the past few days in the videos. And let's just do a quick recap of them here. Now, especially here on this yearly weekly, now we're above value, right? And we are coming into, this is just the yearly chart, so we can't see the price action further out, but we are coming into this big area here in that gap, and we've been talking about this gap, and a couple of scenarios that might play itself out as we approach it here. We came right into it, and then we were pushed down a little bit, and we really couldn't get into it. So if we do start to roll over, maybe this is just a scenario that we pop into it and then roll over some. Maybe we fill it with one more push. Friday we saw, not Friday, Thursday, we saw a really nice push to the upside. Kind of what I was looking for a type of a blow off type of scenario. And and so we'll have to see. But we are here above the weekly value area on the yearly chart, and we are starting now finally to get a little spicy out here on the Momo on the weekly. So that is very interesting to me as well. Now, of course, this can get a little bit more overbought for sure, but we are coming into that area where starting to get real spicy up here. All right. And let's go into now the daily. We didn't have this before last time we checked, but now we're also seeing on the yearly chart that we are above value as well on the on this yearly chart. Now we were talking about the Momo not being completely overbought in this scenario or on this time frame, so there is definitely some room here that this could go up. But like I was saying, on the weekly, we do have that overbought reading starting to come in here, as well as that value area being breached as we get up, into these areas. So we want to be very careful. Certainly not an area for me where I'd be initiating any new long positions. And of course, we do have that backdrop with the debt ceiling. Do I think we're going to default? No. It's a lot of political theater, but that's a whole other conversation for another time. But either way, I'm of the opinion, like I said, it's very, very, very the risk to reward as far as starting new long positions as far as a swing trade is not very favorable in my opinion. So let's see, where could we pull back to? The other thing is that I like to look at, look at the space here, and I think this is an underrated concept that a lot of traders don't talk about or think about, and I'll share it with you here. Now, when we talk about that extension, right? What does the stock look like when it's extension? Now, that 20 period moving average, I like to call the stocks homeostasis, right? I've often made those analogies of stocks being like humans in the sense that, they'll run, they'll have that expanding volatility to either direction, and then they'll consolidate and take that inhale, right? Breath and rest and relax. Okay, so look now as we've expanded the volatility, right? Look how far here the highest price point, right, is from our homeostasis, right? Our 90 or 98 degrees or whatever body temperature is the medium. Look how far extended we are here. Now this usually is not a good sign. We want to be just riding right on it, right? So a real quick answer, where we could potentially see a move back down to, well, certainly back down to maybe just retap the 9 here, right? A little cool off, come down, retap the 9, and then make another move back up higher. We could also stop right at the value area high, okay? That's another scenario, and see if that's supported. However, if we do break it, I would suspect that we would see a lot more selling coming into the market, and that might drive us back down probably to this 20 here. But we're going to look at the fibs here in a second. It's something I'm looking for as a nice potential gauge on whether we're going to see some more selling or not coming into the markets, but certainly want to watch out for that 9 retest, and then if that starts to give up, certainly that 20 around that 412.55 area, 58 area. Under that, certainly could come into value around this right around 411. I guess it's 410. 410.65 is the point of control right now. So another couple of areas that I will be watching for. And if we do come down into this area, we were looking at that weekly confluence, right, on the weekly yearly chart with the 9 moving average right around in that area as well with the downtrend. So we'll have to see, really could set up a nice long position then coming into June. maybe the beginning of June, or the second week of June. If we start to retrace, come down here, and then initiate a long position. I think I mentioned I am swinging some monthly June puts, just like I did back in February. Of course, they were in June, but we will see how those play out. They did go green a couple of times. Let me see if they closed green really quickly. No, they closed. I was underwater about 20% at one point, but they closed down about 4% in the red. So certainly, I didn't add any into the position. I could have, but I did not. I wanted to be a little bit cautious, of course, with these counter trend trades. So, so yeah, these are a couple of these warning signs that I am looking at as far as some type of a retracement is concerned. All right. Now let's go into the here we go. We were looking at these fibs that I did here. Now I haven't changed the swing high, right? Because I wanted to see what would happen. Now I could, right? Technically, we could change it like this, right? But actually, it kind of still works out because this 417 area, you'll see when I change it back, it's going to be 417.58, but here it has it at 417.37. So it's generally that area, and that's not too bad. But I'm just going to keep it here for now, for these purposes. But like I said, I might change it. And certainly that is the correct way to go to the new swing high. But this base right here, right, the highs from May, is what I'll be watching now, okay? This, and I didn't get it perfect, but this 417.50, call it, it's nothing's to a penny. When it comes to these things, I'm more of a supply and demand kind of person versus a support and resistance. So anywhere from that 417.55, 50 down to 30, about 20 cents, all in that zone. I'll be watching, certainly be watching this 4-hour, 20-day period moving average is at 416.76 area, but for more selling to come in. But I want to see here if we start to breach this, and we tried to, as you can see here, we tried in the morning, but it did get bought back up a bit. But we'll have to see if this does end up breaking and we start to violate here, the 20. Okay, then the bears will really be more in action, and I would suspect that we would see some type of a retracement back down into that 786 zone. So I want to watch out for that, and if they do crack under, we'll definitely see, probably likely to see some more sellers come into the market. Here on the 4-hour alone, we are certainly above the value that we have already been established. So certainly, extended from that, as well as on the hourly, I'm sure, and pretty much all the time frames. But yeah, so that's never something that you really want to see as far as being a bull is concerned. Markets want to stay in those value areas. Again, kind of like it's homeostasis, but really it's an accepted areas of doing business in the auction, and we are outside of them. So for me, it's like, how much more inventory is left to go long here? And when you don't have any more inventory left to go long, what happens? It sells, right? And that's kind of the area where I personally think we are into right now. And like I was saying earlier, okay, we can sell all the way down to 400 and still, in a bigger picture, I'm still bullish. So, we're just talking about a retracement. I'm sure everyone will be more than thrilled if we're trading back in the range again that we have been trading in. I don't mind it, but everybody's annoyed about it. But I think it's kind of a likely scenario here. So those are my thoughts on that. Let's talk about for the bulls. What can we look at? We've talked all about the bear case here. What can we look to expect? Well, if they can, in fact, hold the this breakout, right? Okay, above the 417.50 area and hold this 20-day period moving average. Okay, we could have a chance to make a move back up. Right here is looking a little bear flaggish to me, but at least a 4-hour did close above the 9-day moving average, so that's okay, but starting to look a bit like a bear flag to me. We could see more of a retracement, right? So we could see a push. I like to talk about the 50% retracement, 25% retracement, which pretty much we got right here. But 50%, if we cut this candle in half, it would probably be somewhere, and I'm just eyeballing it here, somewhere in this range, right? That might be a little high, around 419.70, 50 maybe. If we come down to this 59, it doesn't look like 50%. There we go. That's pretty close. So somewhere in this area, it still looks a little high to me, but you get the idea. If we start to take out that 50% retracement, right, and you can see that these wicks here pretty much line up for it. So yeah, if we get back over 419.50, okay, then we might have a chance to get down to this POP breakdown candle here and maybe retest these highs around 420.75. And then if we do in fact break over the highs, then we're going to be looking for that gap fill to be completed up in this zone here that we were looking at on the longer time frames, right up here. And so it would be up in this area, up all the way to 420.22, and then maybe we could come up into this zone here, and all the way up to this one here at 425. So those are the other areas I am looking for to the upside. Only if we can start to break up and get into this gap, and then we will probably be pulled up into that area. We did talk about this volume profile gap here that I am watching, and so that also could be something interesting to watch out for if we do see some more bullish activity. That could be filled right here as well, but we'll have to see. So yeah, that's pretty much what I'm looking at. Let's see, if the bulls can come up 50% retracement, maybe we get higher and we start to grind up into the 420s, the 422, 423, maybe that 425. But we'll just follow the price and see what we get. As far as the economic calendar, I think we do have FOMC minutes. Yeah, we do have minutes on Wednesday the 24th around 2 o'clock. New home sales on Tuesday. That could do something. I'm not really too concerned with that. We do have Bullard speaking at 8:30 on Monday. There is a conference, Bostic and Barkin speaking at around 11 o'clock on Monday as well. What else do we have here to look at? Not too much else. PCE, Michigan Consumer Sentiment on Friday, PCE on Friday, but not really too much. I think minutes is the biggest thing. And then we'll just have to watch out about any comments coming in from Bullard, Barkin, and Bostic. But other than that, it doesn't look like there's too many big things that we have to be aware of. And so, yeah, so certainly hope I laid out some plans, some areas that you can watch for to help, help you navigate the week. Like I said, for me personally, I'm short-term bearish for some types of retracements. But let's see if the bulls have any more juice. Something could come out with the debt ceiling, and we're okay. I don't know how much effect that is having on the market at the moment, but some good news in that area could propel us higher for sure. So either way, I hope you guys have a great trading week. Remember to follow your rules, follow your trading plan, and let's have a fantastic week. All right, take care.